January the 7th, Thursday, noon, coming live at you guys, SmallCapSteve Live. I'm joined by Jay Lutz. We're going to be chatting some of the big news, lots of news over the last 24 hours. Curaleaf just did a $275 million overnight offering. WeedMD just announced that they're going to close their Bowmanville facility. MindMed, they just announced that they're raising $92 million via a bot deal. These guys just keep raising money. And we're going to talk a little bit about how everybody's giving Jay some crap over there for tweeting about politics. And then we're going to be joined by Mitch Geisler of Level Jump, followed by my good buddy Kyler Hardy of Cronin Capital. And we're going to talk sort of deal making, shells, some of the projects he's involved in, mining. He's got lots of really great takes on things. So it's going to be really interesting. I hope those of you who love the junior mining sector, junior markets, venture capital, all that sort of stuff, tune in, because it's going to be a blast. All right, let's go. Jason,
good morning.
Let me adjust it so I'm more in the camera here. This is all new.
I gotta do the same.
I'm the producer, director, host. I'm adjusting. I'm trying to get the hang of this. So how's everything going this morning, Jay? How's everything going there in rural Saskatchewan?
Well, I better not get too political on that one.
Oh, I'm ready to get.
Apparently, I'm not allowed to speak about anything that is outside the world of small caps, and somehow politics has no bearing on the world of small caps. But I guess that's what it is. My sincerest apologies to those that get offended when I share something that is not directly related to a singular equity on my feed, but. Sucks to suck, I guess.
Hey, Jay, keep your mouth shut there. Just write us them small cap articles. Don't be talking shit about my boy Donald Trump.
I think the most interesting part is I got in shit for talking about politics on a day where people were making money because of the Democratic sweep. If that makes sense to anyone, let me know, but sure don't to me.
Yeah, it's look, it's part of the sandbox we play in. Junior markets, Canada's a big gold place. Democratic or the Democrats sweep. What does that mean? That means that they've now got full control to do what they want to do. Generally speaking, that means that they got carte blanche to introduce some pretty large stimulus packages. So I think that this certainly is good for the Canadian junior markets on the cannabis front, on the psychedelics front, on the and most importantly on the mining front, commodities, gold, silver, copper, you name it. They all are going to do quite well. The events yesterday, I actually didn't follow it that closely. I was in the car taking a conference call with my 1-year-old girl Allie screaming at me in the background. So I didn't really have time to actually check it out. But this is fitting for how Donald Trump ended his tenure.
Yeah, it is absolutely. I mean, I'm not going to say much. I'm highly opinionated on the matter, but I'm not in the mood of polarizing our viewers based on my singular viewpoints. There are certain areas, politics-wise, that despite things impacting us directly, we have to shy away from commentary-wise, at least outward-facing. Certain parts of the events were certainly surprising and not what I would have expected, but I guess that's just how it goes, right?
Yep. Okay, so let's get into the news here. Let's kick it off with Curaleaf. Curaleaf Holdings. They announced a $275 million overnight marketed offering. So this means that they've started to raise money. Walk us through, what is an overnight marketed offering?
It's basically smash and grab for cash, is my understanding. So last night, Curaleaf actually announced that they would be doing a financing. It'd be based on a prospectus that was filed on November 2nd, 2020. That prospectus had allowed for up to $1 billion to be raised by the company. I don't know that they've used it for anything. Pardon me?
$1 billion with a B. That's
$1 billion with a B.
That's
so I mean,
that's a company listed on the Canadian Securities Exchange, by the way, that is raising $1 billion with a B to go do cannabis deals.
Yeah, and I mean, let's keep in mind that prospectus is valid and for typically a period of 25 months. That hasn't really been the case for cannabis operators because they use it up before then. But yeah, so this particular raise, they announced $275 million this morning. It's directly a result of the Georgia sweep. Boris Jordan, the executive chairman of the company, said as much yesterday in the announcement and then reiterated that again this morning. He also had some Twitter commentary on it. I mean, good for them. Never let a event such as this go to waste, and they certainly aren't.
Yeah, I mean, Curaleaf, it's done quite well here. Just pulled up the chart here on Y Charts, $13. Pulling up some of the key stats here. Market cap of $9 billion. So Curaleaf's got to be.
So let's clarify there that $13. You've actually got the OTC symbol up. So
that's a good question here. Let me try to pull this up. The Canadian one here.
There we go, 1729. So
it's actually 11.5 billion Canadian.
Yeah, so it's conducted at 1670 off memory. But I mean, because of the high price level, it's really not that bad dilution wise, and it's shares only. There's no warrant.
Do you put Curaleaf in? Are they tier 1? Is Curaleaf?
I think most people classify them as a tier 1
MSO. And some people are going to say that that's a stupid question. I don't think it is. That depends on on really how you want to define a tier 1 MSO. I'm of the mindset that a tier 1 MSO is already generating positive cash flow, right? They are already. I look at that OCF number, and here we can kind of see on a trailing 12 months basis, negative 33 million. EBITDA on a trailing 12 months basis, they actually have them at 170 million. So that's significant. I'm going to have to say, and it's funny, I was going through this with young Justin last night. We're trying to think of how do we classify tier 1. My first thoughts was Trulieve and Green Thumb are in a class of their own. And then there's kind of like, there's tier 1A and tier 1B. Curaleaf certainly tier 1B. But are they in that tier 1A? Are you prepared to say that if I'm picking my horses that I want to bet on in this race in the US, okay, is Curaleaf in the same conversation as Trulieve and Green Thumb?
Market cap wise, absolutely. I believe Curaleaf is the second largest cannabis market cap right now, next to Canopy. That was based on the chart I saw on Twitter this morning. I could be wrong. The chart could be wrong. I don't know, but that's my quick understanding of it. But you certainly raise valid points in terms of cash flow wise, right? Now, there seems to be no problem for them to obtain capital. So based on being able to conduct a $275 million raise, I'd probably have to classify them as tier 1, absolutely. Whether it's that A or B category, I guess it depends what you're basing those categories on, right? If it's purely cash flow, then absolutely Curaleaf would be tier 1B. But are we also comparing footprints in that discussion, or?
Yeah, so
there's so many different aspects you could compare it on, right?
So looking at this line here, cash flow from operations, we've got Green Thumb and Trulieve are both clearly in a different class than Curaleaf. Looking at valuation wise, we got 11 million for Cura. Green Thumb is 7.5. Trulieve, this is clearly thanks, Y Charts. We pay you good money, and you can't even get the proper cap table up. Truly's not at 5.8 million market cap, are they? Is that accurate?
I don't know. Give me 2 seconds and I'll take a look here.
I'll
go my trusty CEO.ca.
It might be accurate, actually. It's probably in that ballpark. I'm getting feedback here.
I'm being told 2.84 by Trueleaf or by CEO.ca based on 58.
CEO.ca is like a message board service. I don't put too much stock into.
I always use it just for the quick and dirty, right? So
yeah, no, there was 110 million shares out when that thing first went public. So that number's got to be.
It may not be accounting for the different classes appropriately.
Yeah.
Anyways.
Yeah, we'll move on here, but I think that just looking at cash flow generating and an EBITDA sort of margin, I don't put Curaleaf in the same conversation as Green Thumb and Trueleaf. Let's move on here to the next story. Weed MD. They closed their Bowmanville facility. 20 employees impacted. Take it away there, Jay.
So this one, truth be told, WeedMD is a past client. I harbor no ill feelings whatsoever, but this one was on the wall as far as I'm concerned a year ago when the transaction with Starseed was initially announced. At the time, we kind of viewed it as WeedMD was acquiring a sales channel. With the closure of the Bowmanville facility today, that's effectively what that transaction results in, right? Bowmanville was acquired. That facility was acquired by Starseed from Canopy Growth. It seems to just not be the best environment for growing cannabis. It was effectively changed to their distribution hub, and that didn't really make sense, right? You've got 2 facilities in the London area. Why would you ship them elsewhere to ship them off to your supply or to your distributions, right?
I got a call from George Scorsis, the recently named CEO, 2 nights ago, hoping to get him on the show. He's got some pretty big hot takes on sort of where the space is and where he thinks it's going. He's now the CEO. There's a lot of stuff that happened there, and obviously the Canadian cannabis market didn't turn into what everybody thought it would. But I think it's really interesting to try to get that out of him on live TV, see what I can get him to say, because I know that there was some bad blood after the M&A on both ends, and I don't know what I can get out of him, but we'll try to get him on the air and squeeze what we can out of him. Let's move on to the next story here. MindMed raises $92 million via bot deal. Is there much to say about this?
It just goes back to that R&D or biotech research, whatever you want to classify it as, firm getting that cash position that will enable them to do the research they need to do. This financing at $4.40 a share was originally announced when they were trading in the $5 or with a 5 handle effectively. Announced, I believe, December 18th for $50 million, and they raised nearly double that. So, I mean, there's certainly demand for this company, at least within the psychedelic space. And I mean, it's been holding up well today. Last I checked, despite raising $92 million, which was just after the company raised a little over 30-some million. So very well cashed up.
They've got real cash on the balance sheet. They can go and try to do some significant R&D. Okay, so next I'd like to bring on Mitch Geisler from Level Jump. Mitch, are you there? Uh-oh, I think he's froze already. No, there he is. Can't hear you. Is your mic on?
Hello.
There we go.
Apologies. Good morning, good afternoon, gentlemen. Nice to be on and chat with you.
Thanks for having us. Thanks for coming on the show. Not enough coffee. I'm sleeping about 6 hours a day. It's crazy. The small cap world is just going absolutely nuts right now. And I was talking with a friend. It's actually I almost said the name, but he said I've made more money in the last year than I I pretty much have in my whole life. And here the economy is just like in the total dumps. So it's a good time to have a hot deal, which you have right now. See that Level Jump's trading quite a bit. What can you tell us?
Yeah, things are going well. We're a new issuer. We just came on. We are specializing in a healthcare company with a very specific focus on diagnostic imaging. We have operations that supply critical emergency room service to hospitals. We're a cash flow positive company that's been going strong for a while. And now with the help of the public markets, we're really looking to take it to that next level, searching out for the right acquisitions and expansion of our current operations. And there's a lot of opportunity in there. I think we're probably lumped in with all those telehealth companies, but we've been around for a long time and kind of been supplying telehealth for hospitals, that kind of service for 16 years now.
Mm-hmm. Can you walk us through the business model in simple terms?
Yeah, absolutely. Basically, our crux of our operations right now is a company called Canadian Teleradiology Services, or CTS. That's our subsidiary. And we supply remote radiology services to hospitals. So these are patients, they go into the hospital, to an emergency room. Could be something like, they've fallen and broken an arm. Could be a stroke. Could be very severe, kidney stones, whatever the case may be. They need a CT, ultrasound, some kind of diagnostic imaging. And these hospitals that we service, they're in small urban centers or rural communities. They don't have enough radiologists, and they don't have anybody to cover overnights, weekends, certain times of the day, provide that service that you need in your most crucial time when you're in an emergency room. So the hospital is able to take the CT or X-ray and what have you. Then they're able to send us the images and page our radiologists who can view the images from their home, remotely, all part of that telehealth, and provide a report so they can proceed with patient care.
I think the most significant aspect of your company really is I come from a small town. There's 500 people in this town at best, and it enables the same quality of care that you would get in a large center. Now, that may not be an issue for a lot of our viewers who are located in the Toronto region, the Vancouver region, or any other major center, right? But it's a real issue for those of us that come from a small town setting and know the challenges. I got to drive an hour to get to a decent hospital. So can you identify just kind of how you stumbled into such an arrangement, just because it's so unique from what's out there otherwise?
Yeah, no, you nailed it. That's it. Communities and small places, if you live in a small community, you expect the same healthcare, and so you should, as you would get in Toronto. So it's important to have it. We got into this business back in about 2006-07 when we were looking at kind of the marketplace in Canada for MRI centers and things of this nature, and had an interest in healthcare. And we kind of came upon CTS, and we loved what it was doing, because here we are in healthcare, which is so crucial. Obviously, it's crux of our daily lives is being healthy, having that help there when we need it. And for CTS, it's providing this service in all these communities that otherwise they wouldn't have it. We go into communities where we're supplying services, and they potentially would not take a CT in the middle of the night, or they would not have a radiologist. They could take the study, but wouldn't have a radiologist to provide a report, and things of that nature. So we provide something that's really crucial, and we're reaching out as much as, so many people do live in a Toronto or Calgary or Vancouver. There's still millions of people that don't live in those areas, and they need the same quality of care.
So what does your client base look like currently? Are you just operating in a singular province, or are you kind of spread out across the country? And where do you intend to go with it?
Yeah, well, right now we've to date, I've always focused in Ontario as the biggest province, and that has served us well. But what we really want to do now is branch out, build a national brand for our emergency room service across Canada. We recently announced yesterday that we had hired a director of sales and marketing, has many years experience in the healthcare sales market. who's really going to help us take CTS, nationally, because we think it's important and we know there's a demand there. So we want to do that and build up the space, because we are one of the leaders already in Canada, we feel, with the percentage of the Ontario market that we have. But what's great about it is it's remote service. So we're going to be looking at places like the Caribbean and Southeast Asia. There's a lot of places in the world that do need and want and require access to Canadian or US board certified radiologists. And this is going to give us that opportunity. So certainly, you have the chart up there for your viewers. We want to expand CTS. Obviously, that's a money-making business, and we want to continue that. We want to create a day service. But we're also going to be looking at acquisitions and kind of doing a roll-up strategy. We've seen it done in other fields with dentistry and veterinarian services, rolling up different clinics within that industry. And that's what we want to do with that. So we're going to be looking at some of those types of acquisitions, and then we're also going to look at technology. So we're really going to be a full-service diagnostic medical imaging business, if you will.
So effectively remaining business to business then, rather than business to consumer.
Yeah, exactly. For us, we think that it's great. When you do business to consumer, the revenue is just what you have that day. When you're business to business, one advantage, the disadvantage is it takes longer to get a contract. The advantage is when you get a contract, it's secured for years and can create, millions of dollars in revenue over the course of many years. So we see it advantageous like that. And even when we do our roll-up strategy for the MRI center, CT, MRI centers, that kind of stuff, any private diagnostic imaging center, is that even though you do deal with patients, and obviously you're catering to the patient and you care about their well-being, and that it's a lot of that is referral business too. So we're still going to be in that kind of doctor to doctor genre, which we think in the long term will lead us to success and differentiates us a little bit from other people in this space.
So that leads into basically what my next question was, is your revenue model. So typically longer term subscription services rather than one-time fees.
Yeah, our hospitals, when they sign up on a contract for multiple years, and they keep going. And when we're a partner with these hospitals, so our service to them is always every day, 365 days a year, Christmas, New Year's, whatever the case may be, every day of the year. It's not like, we just want to use CTS for like 4 or 5 days this month. So every single day we're generating revenue, which we think is really great. And it takes a little bit more work to get into place and build up our radiology group and initiate and kind of launch the service. So once we do, hospitals, they want to keep things steady. So they're very happy with the CTS model. And that's why we have like a very, high threshold of continuing on for many, many years with our clients, because they love the service and there's no reason to change after that, because the model works. It's a proven winner.
Mitch, how long have you been involved with this project for? My understanding is that you're not like one of those guys who run around the street, looking for, 5 deals a year and then gets behind. Like this has been your baby for a long time, right? Yeah,
this has been my baby since we started researching this field back in 2007, but we purchased CTS back in 2009. So I was in a couple other industries before that, but I've literally breathe, sleep, eat, you name it, diagnostic imaging ever since then. We've been focused on CTS. At one point I was running some MRI facilities down in the States. So myself and our CFO, we have a lot of experience in the diagnostic imaging, because it's been the better part of a dozen years now that we've been focusing on it. And that's all we do. We don't not involved with any other companies.
So why the decision to take this public and not just stay private? Well, what was the core idea here when I assume somebody approached you and they said, "Hey, this makes sense to be a publicly traded company"? What was it that sold you on the idea of taking this public?
Yeah, I think for us, we wanted to go to public because we thought if you can access capital through the public market, it's a great way to kind of really expand the way we would like to. I think the other way, it's a little bit harder in the services business when you're just going to traditional banks, and that this was kind of another avenue. So we thought from our perspective, it was a way to access cash so that we could, not only expand CTS, but look at that merger and acquisition kind of sec that I was mentioning before. And then for the investor side, We think that it's great because healthcare is recession proof. It's here to stay. And what we're offering is something that's like very, very key to all the healthcare system, because almost everything you do runs through diagnostic imaging. At some point, you're going to need an image, whether you're in an ER or you go to your doctor with a pain or a problem that they don't know what it is. A lot of time they send you for imaging. So we thought there was kind of a really good balance between what the company needs and what an investor might be looking for long-term, and kind of marry the two. And so far it's worked, and hopefully it'll work as we continue to grow.
Sorry, I was on mute there. Yeah, that's great. I mean, it's just such a different approach. There's plenty of telehealth issuers, but all of them seem to be business to consumer rather than business to business, right? So I definitely like to see some M&A outside of Canada, just because I mean, Canada is a limited market, right? It's more so provincial healthcare systems rather than that of private, and I imagine that's creating some complications in terms of market entrances.
What's there, if I can cut in there, Jay, what's the kind of like M&A that you'd be looking for? And I don't want to box you in, because obviously you're negotiating for different things, right. But what, like, high level, what does that kind of look like that you could put in where there's a lot of synergies? Is there any kind of an idea you can give us of what that kind of business looks like?
Yeah, there's a lot of clinics out there. In Ontario, for your Ontario viewers, are usually like ultrasound and X-ray clinics, and that some provinces allow private MRI centers. So there's a lot of opportunity there. There's cardiology centers, which still kind of relate and kind of fall in our space, even though it's not directly imaging. So there's a lot of opportunities out there, and what we find is there's like kind of a lot of small places where maybe people own like 2 or 3, and then sometimes you'll have a couple of smaller regional players that might own a number of centers, but nobody that's kind of rolled it out nationally. And the bigger you get, you kind of get economies of scale. There's ways when it comes to marketing, costing, supplier costs, machinery, and everything. All your buying power increases and saves you money, which goes obviously to benefits to shareholders in the long run as we expand. So I think there's a lot there that we can do here, and certainly abroad as well. There's nothing preventing us from going to any jurisdiction that we like. But we just want to kind of start off by catapulting our reputation and our knowledge and the connections that we already have in this market space, and then grow from there.
You guys are doing tremendous volume today. 1 million shares traded. Is this a recent roadshow? You have some big phone calls recently. I guess you can't really give us too much.
On SmallCapSteve, the world knew.
It's true. What can I say?
Yeah, there you go. So, we've been working to get the word out, whether it's brokers that came in on our offering to begin with. I know that there's a lot of support there. We're working with some groups to help us and get our word out. We think that it's important to let the market know. Certainly, when we first came out, it was just before the holiday, so it was a little bit quieter there for a few weeks. But I think now people can start seeing our story, and they put the holidays behind them and take a look at us. And I've been trying to do some interviews and get the word out, because the only way for potential shareholders to know is to come on shows like yours and tell our story.
Mm-hmm.
Maybe it's resonating well. Hopefully that's the story.
Well, it's exciting. I think you've got something here. Cash flow, is it cash flow positive or EBITDA positive, or both? Both. You don't see, like, this is Canada. This is the junior markets. We don't see many of those. So
yeah, well, great. When we listed on the TSX, we were they put us as a tier 1 company right away, and I think only like 10 or 15% of their companies in total are a tier 1 company. So it tells us that as we grow the company, whether it's the organic growth of CTS or the acquisitions, that hopefully the TSX getting onto the big board will be in our future as well. So I think we're well on our way.
Perfect. Well, thanks so much for joining us. And We're tremendously long here, so don't screw up.
Perfect. That's my plan, is not to screw up. So,
and I look forward to following the story and having you back on sometime soon.
Thank you very much, gentlemen. Have a great day.
Perfect. Okay, so happy that Mitch could join us, especially on a day where they're trading a ton of shares. That's exciting. What can I say? Somebody comes on SmallCapSteve Live. They trade volume. I take all the credit.
Yes, your head's certainly getting big the last couple days here.
It was always big head, small cap. That's what they call me, SmallCapSteve. That's actually what all my friends who don't know anything about what I do, and they see I'm SmallCapSteve, they always thought it's because I wear small baseball caps. They have no idea what cap means. Market capitalization. It's not really their job. Okay, so coming on next here, I want to bring a friend of mine on, Geisler Hardy from Cronin Capital. Geisler, are you there?
Yeah, I am. How you guys doing today?
Oh, we are doing fantastic.
Awesome.
I can't believe how much activity there is going on in the junior markets right now. What's your take on just like the Canadian junior venture markets?
I'm well, honestly, I've been I'm excited for it, for starters. You know, I've been waiting damn near 10 years for resources to get a bid. It's a good friend of mine, a prospector from the Yukon. When I first got involved in this business, he looked at me and said, "Geisler, be careful. You only get paid once every 10 years as a prospector or in the resource space." And I sort of laughed and said, yeah, sure. And he's almost right, to be honest with you. So I'm happy that there's a bunch of interest in the sector right now. And I think there's a few drivers to be honest with you guys. It's got a lot to do with one, I think, you know, we're all watching what's going on globally, and the craziness that's going on south of the border here right now, which you know, I hope it gets solved in a reasonable manner over the next bit. But the other component I think is really, really key, is the switch in our mentality globally around where we're going to be getting our energy from, and a lot of that is moving over to the to the electrification and the EV revolution, if you will, and that needs an incredible amount of metal, no matter how you cut it, whether it's copper, whether it's rare earths, whether it's, I don't know, a bunch of different stuff, right? It's I think it's an important component to consider, and it's not going to happen overnight. But even those small shifts, you know, new copper mines aren't coming on a regular basis. Let's put it that way.
Yeah, isn't it funny how this focus on environmentalism and clean energy is actually driving mining of all things?
I love it. I sort of sit here and I sort of chuckle to myself every morning while I'm having a coffee thinking about it.
What's your take on so I kind of look at junior mining. Jay and I, we take a lot of calls with junior mining companies, and the quality of the management teams that we talk to make me very nervous. I feel like you know, the junior mining in Canada has been in like this 10-year coma, and it's just waking up. And right now, there's a lack of quality people and quality leadership. How much of an issue do you view that as?
You know what? I think it's a huge issue. And one thing to look at is, you know, the groups. I guess when you look at it, mining deals are usually done as groups. There's groups that'll sort of manage 3 or 4 different mining deals, or 5 or whatever it is, and, you know, another one of 3 or 4 or 5, and different commodity focuses. And if you start to follow those groups, you can see that it's consistently the same groups that foster management teams, that build management teams, that back professionals or train them and mentor them from the ground up, finding new motivated young entrepreneurs to come in and show them, mentor them how to build a company. And then you've got other groups that just sort of shotgun approach and, you know, hey, there's a bid in the market, let's do something. Those ones aren't going to be as successful. You know, there's the outlier that, you know, has all the best intentions and really goes after it, and that's fantastic. But it's like I said, it's consistently the same groups that have won buyouts, build mines, and deliver real shareholder value over a long term. And it's when you start to look at the resource space, the mining space in particular, it's usually not one cycle that you build a mine in. It takes multiple cycles to build to take a mine from whether it's discovery or advanced exploration into production. Just it's a very long lead time, right? So you need the staying power to be able to finance, to be able to permit, to be able to have meaningful community engagement to get those things done. And it's professional teams that get there. And that's one thing that we've really grabbed onto over at Cronin over the last bit, is backing management teams, no matter if it's in the energy space or if it's in the mining space or in the ag space. We want to be part of a management team that needs our help so that they can go and execute, and we can help kind of keep the pieces together in the background. And, you know, admittedly, we were guilty of taking the shotgun approach previously and not being very good at that. But we've learned our lessons, and our group is maturing to actually be part of that. And I think a really good example of that is our deal. Well, two right now actually. TMAS. We've got a great CEO in there. You guys know him. He was on your show a little while back. Michael Dane. Really happy to have him.
Yeah, we tried to film something with him, and he couldn't stop playing with you know those like what are they called, where it transforms your face into like
the filters.
He might have not did that. He might have actually had masks and he was physically putting them on. I can't remember. But, that's your custodian of capital, Kyler.
Well, hey, you know what? He's doing a pretty darn good job there. So I think we need to be able to laugh at ourselves a little bit. And you know, the other one that we're really excited about, and again, it comes back to backing a management team, is Imperial Helium, which you guys are familiar with. You're part of our deal. We're really happy to be working with you on it, and we're just heading into our IPO round here, starting the roadshow next week. Which it was back to management team. Took a year and a bit to put the deal together, but it's come a long way, and I think we've got something really special there. Again, entirely due to the management team and the quality of them. Yeah, so I mean, helium is something. If our viewers want to look at the appetite and demand for helium right now, Royal Helium is a great example. That's led by Andrew Davidson and a few others. That stock was at 5 cents and it's trading at, it's a 10x this year. And they're Saskatchewan, so I'm somewhat partial to them. But after a few discussions with them, it really led me into this whole world of how significant helium is to our everyday lives that most people aren't aware of. So I mean, that's what interested me and the guys initially in Imperial Helium. But are you able to talk a bit about just the significance of helium itself? Absolutely. Yeah, and you know, we'll once we get a little further down the track with Imperial, it'd be great if we could get Dave Johnson, the CEO, on here. He wants to make sure we have a number of the pieces in order so we can wow your audience first. But the significance of helium is that, you know, for lack of a better term, life as we know it is no longer without it. It's part of an MRI machine. It's used for the supercooling of it because it's got such a low freezing temperature to it. It's part of the manufacturing process for electronics. So your companies like Samsung and LG and Huawei and all of these groups, they need the helium in order to create a neutral environment to do all those small circuit board welds so that there's not contaminants in them, because helium is a non-reactive gas, so it doesn't react with anything. So when you weld in a neutral environment, it keeps that weld entirely clean, so you don't have any resistance for your in your circuitry. Other uses for it are leak detection. So any gas plant that you see, any pipeline that you see, any facility that you see, you know, in Ontario, facilities and refineries all over the place, especially in the south, they use helium in order for when they've built a new plant, or when they're fixing an existing, test that vessel and to see if there's any leaks in it, because it's such a small molecule that it'll go through all those little cracks and nooks and crannies in order to show that there is a leak. And it's also non-reactive, so your plant's not going to blow up on you while you're testing it, which is a good thing. The other big one, which, you know, our everyone's buddy there, Elon Musk, he's SpaceX. His the rocketry that they have in order to launch their spaceships is they purge their tanks with helium again, so it's non-combustible in order to in order to mitigate any disasters there. So I think with space exploration, I don't know, maybe becoming a thing. I'm still a little skeptical personally in your term here, but you know, we need the dreamers out there. So hopefully it's able to you know, create an additional demand. But yeah, it really is a fundamental part of everyday life for electronics, the computers we're on right now. So those are some of the uses. Medical, there you go. That's the other one. Medical grade 5.9 helium is a really big one, which actually relates right back to your previous guest there.
Yeah, absolutely. So I mean, at its core, it's essential to the high-tech world we live in, and people just aren't aware. And I mean, it's in limited supply right now. The U.S. is done selling off their what was it? Military storage facilities they had, the BLM auctions. So I mean, the price of it is just going wild because there's such a demand and no supply, right?
Absolutely, and you know, there's but there also hasn't been the impetus to create supply either until recently. I mean, you know, we start to look at like you mentioned, Royal Helium, very familiar with that project. Desert Mountain in the States. We've got Blue Star as well, another great company. We know the backers of that out of Australia. They're doing a great job, and you know, they've really there hasn't been an impetus until recently. Like you said, the BLM, their strategic reserves, they've sold that rate down to the levels that they don't want to sell anymore because they need it for military purposes now. And you know, I guess the major sources of helium outside of the United States right now are Russia, Algeria, Qatar, places that aren't necessarily friendly to North America on a day-to-day basis. But at the same time, you've also got the problem of transport. And we go back to this thing that I mentioned earlier on. When you're traveling with helium, you see these, what they're called cigar trucks that go down the road, and they've got these long tubes on their trailers, and the flexation of that steel, even say you're moving from Calgary to Vancouver, let's say you're moving some helium that distance, you're going to lose a fairly significant amount of helium just by the flexation of the steel of those trucks as you're moving the helium. So you've got a limited distance you can move it logically as well. And yeah, okay, by ships it'll probably be a lot easier, but it's not necessarily a localized market, but I guess it's a regional market is what you could look at it more as, until you get into that really that high grade, the 5.9. Then you really want to that can be transported a lot more because it's such a high value product.
Okay, so enough of helium balloons. I was late to get that up there. Kyler, something that I think is kind of cool about your background, and this is something that I kind of want to highlight when we do these, is it's hard for a lot of young people starting out. They know that they want to work in finance, they want to work in banking, they want to work on the street, and they don't know where to start, right? Like they do what their parents tell them. They go to school, They, study commerce, and then they end up at a bank getting compartmentalized, and, end up pushing mutual funds for TD Canada Trust or BMO or whoever, working in a retail bank. I don't know. But you got to take a different path. And something I always kind of admired about you is you took a very different path getting into mining. And could you walk us through that path you took to get to the point where you are today, those early days?
Yeah, it was a very winding, strange path. And in all honesty, I ended up on the finance side accidentally more than anything. I love it. I love being on this side. The people I've met, the people we've worked with are just fantastic and kind of fun to work with. And, it's about building relationships, but it started when I was young, took over the family engineering company in the forestry sector, helped build that through a difficult time. And I was 17 or 16 or 17, I can't remember at the time, and I turned 18 or 19, and everything sort of got right-sided, and I handed it back to the family and said, here you go, I never want to run another business again. And ended up working on the diamond drills, and was very fortunate just to be getting into that business at a time when when the mining industry was getting a rebirth in 2001, and worked there globally, and had a really great time doing it, and met a lot of people. Still to this day, actually, one of the reasons I've been able to work on this side of the business is I kept the relationships alive with the promoters and with the geologists that I met during that time, and we did a good job for them. So kind of kept going. Worked on the oil rigs for a little while, and on the mining side, ended up in Africa for a bit and had a great time, but decided ultimately that was
what's it like trying to run deals in Africa?
It's hard. It's hard.
I got a buddy who wanted to run a gold deal in Africa. From a North American perspective, there's very few people that can do it, that know how to do it. And it's a great continent. There's so much opportunity there. Honestly, the demographics just make me get excited about going to work there. But there's also a history of things done differently, things maybe not done the best way, or taken advantage of. And it's for North Americans, it's hard. It's that time zone issue, right? We had a lot of success in South America, Peru, Chile, Argentina, arguably, yes and no, and really, Central America, Mexico. There's a lot of Canadian miners operating in Mexico, but where you really find successful North American operators is out of the UK and out of London. And it's because it's that time zone thing. It's you're not waking up at 3 a.m. to do a conference call to talk about whatever a project you want to acquire. And again, the other groups that are really good at working there are the Aussies. They're everywhere. So they got a long history with South Africa. So they operate out of South Africa primarily. But there's a few groups that just nobody wants to work with the Aussies.
But I just said, so working in Africa, we started an exploration service business. Went from 1 employee to myself here in Canada. For 1 employee to 80 employees. Built that up. 2008 hit. Back to 1 employee, myself, and then we started another one and did it again. And sort of that was my lead in. We sold that to my partners. Built that up to several hundred employees. It was a ton of fun, learned a lot. And then, got involved in the mining side and sort of, threw enough mud against the wall that eventually some of it stuck, and formed the Cronin Group. And we've been operating under this brand for the last 3-4 years now, and 3 years, something like that. And it's been.
What exactly is Cronin?
Cronin's a mountain I grew up snowboarding and hiking and mountain biking on up here in northern BC.
Okay. What exactly is Cronin Capital?
Cronin Capital is for lack of a better term, it's a resource-focused merchant bank. So we deploy our own capital off of our balance sheet into early stage resource deals and restructuring deals. We are we're pretty focused on the very junior end. So generating ideas, coming up with a new company, whether it's private or whether we take it public, and then we provide corporate finance work on it. We provide back office work on it, compliance, and help build a management team and a board of directors and help finance it along with our industry colleagues to grow it. And a good example of that is something we took from incorporating the company to doing some pretty substantial M&A over the next bit here is TMAS Resources. And then the other one that we can point to pretty heavily right now is Imperial Helium, and our kind of one that's been a work in progress, for lack of a better term, for a long time is Cloudbreak Discovery, which we're IPOing on the LSE later this month or early next month. It's started that in 2015, and it's been a labor of love. It's been complex and difficult and fraught with failures and restructure and failure and restructure, and we finally have something now that we're able to actually move forward in a good way. And we started it as an oil and gas royalty company, right as oil and gas royalty or oil and gas walked off a cliff.
Here's a question I'm wondering.
Yeah.
So oil and gas, you got a background in that, especially in the junior markets. There's been a lack of development there. Do you think that this is going to be a problem in like 5 to 10 years? I know that we are switching over to sort of that new Green Deal and whatnot. Do you think that there's going to be some issues in 5 to 10 years with the lack of discovery of projects?
I think so. I think that there's a few components. Right now, I think that you're actually going to start to see a tightening of the energy market, especially in North America. At these levels, shale development isn't necessarily profitable. You need to keep that drill rig ahead of your decline in order to maintain your production profile. Just isn't feasible. I think a good example of that is Chesapeake and the issues they've had over the years here. I hate to call them out. I've actually done well on them over the years, but it's what it is. But I think directly to your point, I think the Canadian energy market is really going to suffer. What I'm really excited about in the Canadian energy market, though, is how much people have ignored natural gas. And I think as part of this EV green revolution that we're talking about broadly here, yes, okay, the oil sector is going to do, there is an underfunding in it, but there's still a lot of oil and gas in Canada. They look at the oil sands. It's a matter of the fact that it just takes a long time to pay themselves back, but then they operate for a long time. And that oil will still be there. It'll still continue to pump out. We'll see whatever 40, 50, $60 for the next while, and we'll call it good. I don't know what the price is, but what I'm really excited about is that transition. I think natural gas is going to play a big component in that transition. It's considered, a greener energy than oil, and coal and all these pieces. And North America has a lot of natural gas. There's some of it's tight, some of it's shale, but there's a lot of it here. And I think that's evidenced by the pipeline being constructed, 80 kilometers from my house right now, to the LNG facility that's being developed on the coast up here. That project's been fraught with delays and cancellations and restarts, but they're doing it now. So people far smarter than me I don't know about far smarter than you guys, but it's have decided that there's a market for it, and that market it's going to be another 2-3 years, but it'll be exporting from here. And what I like, though, is I get back to this thing that I was talking about, is that transitionary energy opportunity is, I think, natural gas. There's a lot of it. We can build plants relatively cheap to provide energy in a lot of areas. But I think there's an interesting idea here that, okay, maybe we can provide enough energy out of green sources, out of wind, solar, geothermal. I just don't see it, to be honest with you, unless we get really efficient. And even then, I think, I don't know. I don't know the research, but one way to look at it is, I think that nuclear power is a long-term solution, especially in a place like Canada. We have some of the highest grade uranium in the world up in the Athabasca Basin, great production profiles, companies that have shut in operations right now just because the uranium sector has been hard. But I think that the nuclear is really, I think it's exciting, but it's a longer term solution. I think it pairs well with a kind of renewables perspective, and it's a consistent, stable energy as well. Whereas, wind doesn't blow some days and sun doesn't shine some days. So even though that technology is getting better, it's not quite there yet, I don't think. So all the way back to answering your question, there is going to be a profile of underspending and underdevelopment in the energy sector for the next while. But at the same time, it's unlike mining. You can drill a hole in the ground and be producing out of it pretty quickly, not over multiple cycles, call it over multiple months.
So then my question for you largely is, because you're a merchant bank dealing in such areas, how have you allocated your money to reflect your expectations for where we go with renewables in terms of what's required to power them, right? You've talked a lot about natural gas, now uranium. While I'm not disagreeing with you, I'm just curious how you're positioning for the future to accommodate for that.
Absolutely. And I think one of our companies right now that we're large shareholders in, between us and Cloudbreak, is TMAS, high tech metals. It's a key component of it, and we're building that, and we've got a lot of work to do on that yet. I'm really excited about being part of the green space with that, but also the ag space with some of these with some of the ideas we're looking at from a mining take on the ag space, but also copper. I'm keen on copper. I think that there's a really good opportunity. There's a lot of projects globally that are developed, that have large resources, that are ready to go into feasibility, but we still need to advance earlier stage and mid-stage copper assets in order to meet that demand of the electrification. There's going to have to be a lot of transmission lines put in order to move the amount of electricity that's going to be needed. So I think copper is a good way to play it. I'm keen on the nickel space. Nickel sulfides in particular I'd say they're a very hard commodity to go after and actually do a discovery. It's easier if you find something that's already known, but it's finding something that someone isn't working on already. And there's going to be the amount of nickel in batteries is pretty extensive, and just in general construction of infrastructure as part of the steel. And lithium is always of interest. My only issue with lithium and the specialty metals in the battery sector is it's so, the major producers of lithium can turn the knob up and meet demand. But are they going to do that? Are they going to keep the price as is? Can you find something more domestic in order to meet that demand, rather than say from Chile or Argentina or Bolivia? But I'm not entirely convinced on the spodumene deposits for lithium. I think the most efficient work there is in the brines, and there's one brine extractor operating in the States right now, and there might be a few more in the coming years. But we're looking pretty hard at that brine sector in the United States, especially out of the oil patch and wells that have gone into their final decline, where we can almost be paid to come in and take them over.
Something I find hilarious about every lithium cycle is there's always a bunch of projects in Canada that pop up, and nobody ever gets to production. Like all this money raised, somebody's going to spend it on drilling, which I don't think is that important from like a practical standpoint.
No,
it's like low grade gold. If you really need it, and it's there, you can probably start to put some production work in place.
Exactly. Yeah.
But instead Nemaska decided what they blow through in cash, Jordan, like $2.5 billion or
wow.
That's probably high. It must have been $1 billion. They must have been over $1 billion.
It was a lot of money. I know the debt on the books was somewhere in like $450 million alone, and that's when they went belly up.
Wow. Let's who ended up buying that deposit? Do you guys remember?
Palisades Group, maybe, or Pallinghurst, maybe.
Yes.
Pallinghurst went into a joint venture with the Quebec government. The Quebec government actually had a position in Nemaska, and basically they said you guys aren't getting it done, and Nemaska got the boot, and they just kept the asset. That's my understanding.
Yeah, Pallinghurst, Gilbertson's group, I think, out of South Africa, right? Or London.
It might be London.
It's crazy to me the fact that you remember that off the top of your head. This is just a reading file.
I have not looked at Nemaska in months.
I know you aren't sniffing out assets or talking to deal guys or anything. You just read that in a filing and remembered it.
Yeah.
So one thing I want to point out, you've kind of brought it up a few times, is the significance of these different groups that are continuously bringing deals to the market. This is something that myself and Steve keenly watch. However, we don't write on it a lot because we don't really care to open ourselves to lawsuits, right? Like it's just not worth it in a lot of senses. But I mean, small cap investors as a whole, to me, they need to, and the different groups that seemingly run together a lot in the small cap world. I think that's a stated thing in small cap. And I mean, to be clear, this happens in sectors. We're talking about mining. We're talking mining right now. But I mean, this happens in cannabis, psychedelics, any type of mining. Anywhere you look, it's there. Even emerging sectors like the food space, right? So I just want investors to start to look at it. I just feel it's so underrepresented in a lot of discussions.
Jay, I think that's a really great comment. Personally, I mean, look for similarities between boards. When you start to see that trend of, okay, this is the last 3 things or last 2 things that this group did, and it's it's not the same board, but it's a similar board. There's no guarantee, obviously, but you can have a greater degree of certainty that at least they're going to try really hard in order to make something good work with the project they're on. And if it doesn't work, well, they'll restructure or they'll find something of significance. Takes a lot of drill holes to decide if something's good or not. So.
Well, Kyler, I appreciate you joining us today. This was fun. Let's have you back on after some of your projects to move the ball forward a little bit. And thanks for joining us.
Steve, Jay, thank you very much, guys. Really appreciate it. I look forward to coming back and talking to you guys again. And I think this was a lot of fun.
Perfect. Thanks. So Jay, that pretty much wraps it up. I'm a busy man, and I know you are too. I wish that both of us weren't as busy as we are, but we are. So let's wrap it up from there. And tomorrow, I don't even know if we have a guest lined up yet. So If
No, tomorrow I think it's you and me, and there's nothing wrong with that. I'm sure we can. There's always enough for us to
just
gab
the
about in this
two of
space.
us building castles in the sky.
We'll try and avoid Steve saying. Right before this, young Justin had out a piece on the cannabis analyst take on Georgia going blue for the Senate. Some big implications there. We covered a bit yesterday, covered a bit more today. Right after this, we have Trevor Peters of Willow Bioscience on the Daily Dive with our host, Cassandra Leah. That should be a great interview for you all to watch. As always, we hold no investing-related licenses, since I know Steve will call me out on it if I say no licenses. Entertainment purposes only.
No
Standard.
licenses or designations. We're
Or
double
designations,
degenerate.
sorry. No designations and no licenses within the finance space. But yeah, we'll see you guys tomorrow.
Well, thank you everybody for joining us. You could have spent your last hour doing anything, any place, staring at any screen. You chose to spend it with us. I appreciate that. And hopefully you guys will join it tomorrow as we wrap up a great week. All right, thanks.